need to know about, because more than likely you're probably gearing up to plan on have the best year ahead. And a lot's happening with lending right now that creates a limited window for you to take action and still be able to get the money you probably deserve to have and want to have to be able to make it the best year ever. So today we're going to decode this. We're going to look at what's changing right now in the lending environment, what you need to know about, and the exact actions you need to take to get in, let's say, while the getting is good, before it becomes harder, if not impossible, to access the actual capital that you need. So, look, we're already seeing this. Lenders' belts are tightening. It's the beginning of a historical trend during financial uncertainty. Every time we have a lot of indicators that point to recession, the exact same thing starts to happen. Banks tighten up, as we call it in the lending industry. It's harder to get loans approved. It's harder to get financing. It's harder to get private equity, even venture capital. So it doesn't matter if you're looking in the debt markets like credit lines, loans, or credit cards, or venture capital. All of the indicators here are clearly pointing that when we get into financial uncertainty, nearing a recession, that it's just harder to access capital. And now we're starting to see a lot of this happen, and a lot of these same trends that we're starting to see even like we saw back in 2008. It's harder to get credit cards. It's hard to get credit lines. It's hard to get loans. The amounts that you're actually being issued are lower. We're finding people having their credit lines called due. We're having people have their limits reduced on existing revolving credit that they all have. All problems that we're going to get solved right now as we dive into exactly how to solve them. And we got to, because the reality is it's only going to get worse. There's a big difference between signs clearly pointing to a recession and actually being in a recession. Like, the lender's attitude gets significantly worse the closer we get to just not knowing what's going to happen to clearly knowing that we are really facing a recession. So it's going to get worse. We got to be prepared. And it's probably now is the time to take action, so you are prepared, right? And we understand why we got here. Inflation's at record levels higher than it's been in 40 plus years, right? Employee wages aren't keeping up with the increase in their expenses. So there's less disposable income. There's less money to buy your products and services. And business owners' optimism is falling, right? And this is what causes a lot of problems with the economy. Is it's just consumer confidence. And we're starting to see all these indicators. Even yesterday, the Fed raised the rate another half a point, right? So this all creates falling optimism, which again, tighten up, they tend to spend less, right? And at the same time, interest rates just are on the rise. They've skyrocketed. I don't know if this is a true stat or not, but in my time on this earth, I have never seen interest rates climb as quickly as they have in 2022. Like I said, we just saw a 3/4% rate hike. Now we just saw a half a point rate hike. A nice thank you, a Merry Christmas gift by the Fed as we go into the end of the year. And by the way, they are still projecting that they're going to continue to do it because they're not getting the result they want. They're not curbing inflation even by raising interest rates at record levels that they ever have. So all of this means it's harder to get money, it's harder to get the approval amounts we want, and it's harder to get the rates that we want to pay. Okay, so loan amounts are dropping and rates are climbing, which means we get less and we pay more. Not a good combination. These are things that we really need to get in, we really need to solve. And by the way, if you're just coming in, tell me where you're coming in from. Give me a shout out. Tell me your business name, and I'll give you a shout out right here on the live stream. It's just like free exposure for you. Thousands of people are going to see this. So I don't know, could help you in your business. So give me a shout out. Tell me where you're coming in from. So look, it's only going to keep getting harder, right? The Fed is expected to keep raising the rates in 2023. They just raised it, like I said, a half a point. NerdWallet Small Business Financing Index shows downward trend in lending. We're seeing lenders lend less. The Biz2 Credit Small Business Lending Index shows a downward trend in lender approvals for small business loans. The International Monetary Fund says global growth is forecast to slow from 6%. Okay. So what I'm saying by all this is that in the US, when we look at this and the stuff that I look at to really predict what's going to happen in lending, all of these indexes show the same thing. We're seeing lenders tighten up. They're lending less money. They're tightening their belts. It's becoming harder for us to get approved. We have to understand that because lenders are ultimately trying to protect themselves, right? So if we even look at our core signature product, the Credit Line Hybrid, where this is our signature product because more clients get approved for this than any other kind of funding we've ever touched. Even that raised its requirements from 680 FICO score to 700 FICO score. That might sound like a really small deal. But I can tell you that as a company, it's maybe 50, 100 hours worth of work for us to go through every blog post, every web page, everything we have to update in our world just because of a 680 to 700 score difference. It's significant. And for us to be able to make that change, we're doing it because it clearly has shifted. It's not like this is a temporary thing for right now. We're clearly seeing that credit requirements are tightening up, and they're going to be tightening up for at least a year, if not years to come. So it's a really big decision for us to even change that requirement from what we promote, because so much work is involved, but it's happening right now. Lenders are requiring better credit for approvals. They're requiring more established business credit. They're requiring improved credit scores. Like I said, even in these premier products, they used to be able to get into with a good FICO, 680, 675. Now you're looking at 700 type of credit score. So what can you do, right? We want to help your business and yourself any way that you can to be able to get ahead of this thing. And that's really the key. Now, there's a lot of actions you can take. For example, business credit. Building business credit can help you, right? I mean, lenders are looking for better credit. So having better credit scores, business credit scores, having access to more revolving credit now before things get worse and tighten up, that makes sense. An easy way to potentially solve part of this problem. The credit line hybrid, still a great financing option. And typically what we'll see and what we've seen in 2008, what we've seen during COVID as well, is that in the months, if not year to come, then what will happen is we'll see people start dropping from what they normally get approved for, which is about 60,000 maybe on average, to 5, 10, 20% lower than that. So what happens is people go from getting 100 grand to now getting 60 grand or 80 grand. They go from getting 60 grand down to getting 30 grand or 40 grand. So what's happening is you still have a chance to get in now to grab money while you can before it continues to get worse, because everything shows that the spiral is already starting. And that really is the key to all of this. It's only going to get worse. I've been talking about this for a year, saying this is coming, get money, stock up now. We've already stocked up second quarter of this year. We already went in and got a new credit line. We went ahead and got a loan. We saw rates climbing. We saw it harder to get money. I've been preaching and screaming and yelling and begging you to do the same thing. And now here comes all the data. Here comes all the statistics to support everything that we've been talking about here for the last year. But you still have a window to get in before we continue to see these rates climb, before we continue to see the financing and ability to get financing tighten up. So again, credit line hybrid, one great option, right? No collateral, no doc, up to 150,000 in financing you can get. You're also able to get approved even if you don't have a 700 FICO score, because you have a credit partner or somebody else that does. It also makes sense to start building business credit, start stocking up on that as well. What you really should be doing right now is getting as much revolving credit as you can, because that's the best way to navigate financial uncertainty, is just having revolving credit available. Credit you don't have to pay money on unless you actually use the credit. Now, I'll be honest, at the same time, you should be getting a loan. If you have any intention of getting a loan, get it right now. Because as the Fed continues to increase rates, the interest that you pay on the loan that you get is just going to keep going up and up and up. And that is the problem with revolving credit, is most revolving credit has variable interest rates. So you can stock up on it and have it in case you need it, but the interest rates are going to go up as the interest rates climb. But a loan, you can get in now, lock the rate in before interest rates continue to climb, because they're going to continue to climb through 2023. So if you haven't already done so, get it now, because it's a substantial difference. And I was actually talking to somebody about this and running numbers on a mortgage. And if you look at interest rates at the beginning of 2022, this is astonishing. If you look at the interest rates and payment on a mortgage in 2022, and you look at where we are going to be at the end of 2022, especially considering a half a point rate increase that just took place, then your payment is almost double for the exact same mortgage. It's astonishing. Do the math. Don't trust me. Go back, look and see what mortgage rates were at the beginning of the year. Look at where they are now and run a mortgage calculation to see what the payments are. It's almost double. And that's exactly what we're looking at with loans as well, which means if you want to borrow 100 grand, you're going to pay twice as much going into the new year as what you would have at the beginning of the year. And if you keep waiting in middle of 2023, end of 2023, it's going to be even higher than that. So the nice thing about loans is your rates are fixed, and you want to grab it now, because as rates go up, you're just going to be getting less money and paying a lot more money to be able to secure less money. So something you absolutely want to consider and something you want to take action on now. And we've got Trija Management LLC and Frederick checking in from Illinois. Thanks for coming in. Newport Beach, California is in the house. Hey, Natasha from Palmetto Financial Restoration Services LP. Tootie's Company Inc. I love that. A property management company. And Jack Thomas, JT Power Washing LLC in Tyler, Texas. You know, they named Tyler, Texas after me. I'm just kidding. But anyway, thanks for coming in and saying hello. And I've got some more shout outs and I'll give you those out in just a few seconds or a few minutes as well. So now's the time to invest in success, right? You got to focus on fundability. I talk about this a lot. I'm not going to spend a lot of time on it now, but the bottom line is it becomes harder to get money. The structure, the setup, the credibility, the legitimacy of your business becomes very important, right? So we want to think about not just fundability foundation, like I talk about, setting up your business, getting a business address, a business phone number, making sure all your information is congruent online. I've got fundability training on YouTube that will walk you through everything you need to know about fundability. Someone, if they're listening, may even drop in our chat that will show up here how to get our actual mini course. And I think it's at our mini course on fundability as well. So again, you want to focus on the fundability foundation, but we also want to focus on the other aspects of fundability, building business credit scores, improving personal credit scores. If you have credit damage now, I ain't the guy to fix it. Okay. I don't work with consumer credit, but there's plenty of other reputable credit repair companies out there that will help you improve and fix your personal credit. You want to focus on it. It's just going to be harder to get money and they're going to require better credit scores. So if you haven't already, now's the time to start having a professional help you address any negative items you have that are dragging down your score. Build business credit, as we talked about. It's only going to help you. This is a nice thing about this. These things are only going to help you. Like there's zero hurt in these things. They're only going to help your position because lenders want to lend to people that have credible businesses, legitimate businesses with fundable foundations set up the right way. They want to lend to business owners that have good personal credit, histories that show they pay their bills as agreed. They want to lend to businesses that have established credit profiles and scores showing others are giving you money and you're paying that money as agreed. And you also want to think about what you could be using as collateral as well. Maybe now's the time, if you charge for a high ticket item, to let your customers pay you on terms. Let them finance whatever it is they're buying from you. And in doing so, the benefit from that is that you're actually making it easier for them to buy by spreading out their payments. And you're creating something called AR, or account receivables, which is a huge asset that can be leveraged to be able to borrow money again. That's a win-win. You make it easier for customers, right? That's more money coming in the door for you. And then you leverage the fact that you're letting them finance it as AR, get AR financing, and that helps you get even more money in the door. So all of these things are things that you can do right now to actually better your financial position and get yourself to a point where it's easier to get the money that you want to get. And Am Drum Media. Par for Humor LLC. I'm going to put that on the screen, from Louisiana because I can't pronounce it right. Chris, thanks for coming in. Thanks for anchoring this media space, business credit for all these years. I appreciate that. Elaine, hey, Appalachian Cakery in Old Fort, North Carolina. Thanks for coming in. That is awesome. Exquisite Home Investors LLC from Malton, New Jersey. And we've got credit with Cisco now. Congratulations, Elaine. I'm glad to see you progressing. And Albertson here, Aluna from Dignity Home Solutions LLC in Ontario, California. Thank you very much, everybody, for saying hello. Tell me where you're coming in from and giving me a shout out, or letting me give you a shout out for your business. So again, as we talked about, business credit will help give lenders another reason to say yes, right? We want to continuously always work on improving our business credit scores, on adding accounts to our business credit profiles. Okay, it helps you keep more money in your bank account, in your budget. And what I mean by that is that when things get tightened up, we have choices of how we spend money. We can spend it on credit. We could use loan proceeds. We could use our cash. So when there's financial uncertainty, we always want to stay away from using cash. We want to keep the cash in the bank for things we may need, like payroll. And we want to start deflecting the money to places like revolving credit that we can spend it there, even if we carry some interest, just so we have more money in the bank to help us navigate financial uncertainty. We did this during COVID. 100% of everything we could, we moved to credit lines and credit cards. We stopped spending money. The cash that came in went in the bank, and we started stockpiling cash in the bank because we didn't know what was going to happen. Once we realized that we were good, we were okay, we weren't going to see significant drops in revenue and profits, then we were able to pay off that debt before much interest accrued. It just gave us the flexibility to make that choice. So business credit's big on this. It gives you more money in your bank, more money in your budget you can spend on things you need to, because you're again using revolving credit to buy the things that you can use revolving credit to buy. And business credit financing help preserve your loan proceeds. And that's the whole point, is that, look, we got a loan beginning part of the year and 100% of the money from that loan is still sitting in our bank. Now, I am not one that usually advises that. If you follow my training, you'll hear that I typically say, the thing about a loan is you're going to start paying on it right away. Don't get it unless you know you're going to use the money to invest in something. But again, you heard me change this early part of this year and say, look, get money now. Interest rates are going to skyrocket this year. You need to get money now, even if you're not sure of the use of it, and put it in a separate account. And one of the guys that I coach actually had the exact same thing going through COVID. He said, hey, look, I've got a chance to get money from this EIDL loan or PPP. I'm not sure which it was. What do you think I should do? I'm like, get the freaking money at the rate that is. I think it was an EIDL loan. I'm like, at that interest rate, you need to get the money. I don't care if you have a purpose or not. And you set it somewhere and just pay the minimal interest you're going to pay and have it there when you need it. And he did need it, and he used it to make a huge acquisition. And as a result of that, I think doubled, if not tripled, his revenue. So this is the point, is that, hey, now we want to get loans when we can, even if the money's just sitting there, because we want to get it before rates climb, but we don't want to use that money unless we have to. So now the money's just sitting there just in case I need it. And I'm using revolving credit to pull my way through because it's easier to pay it down and then reuse it. But again, it helps you preserve loan proceeds, keep those there for when you need them. Use revolving credit to carry yourself through while you're keeping more money in the bank. And by the way, this is called leverage. And it's not just my advice. It's not something I just make up. Think about it. I cover this all the time. The biggest companies in this country all do exactly the same thing. There's a reason I pull a business credit report and show you Walmart, and I show you Amazon, and I show you Dell and HP and Apple. I show you all the trade lines on their business credit reports because I want you to know that there's a reason they have hundreds of trade lines. I literally had somebody on my podcast this week that talked about Warren Buffett that said the same thing, right? There's a reason that Warren Buffett's company, Berkshire Hathaway, is worth so much money, but yet they're still borrowing and have billions in debt. Warren Buffett's probably one of the smartest financial investors I've ever in our time, for sure, almost for sure, I would, in my opinion, maybe ever. And yet there's a reason he's borrowing billions in debt, right? Because he gets this cycle. Everybody does. There's a reason that Walmart, 80% of what they put on their shelves, they're buying with credit. There's a reason that Apple, has the most valuable company in the world, has $100 billion in debt. Every one of these companies gets to where they are because they're mastering leverage using other people's money. They use other people's money to grow and scale. And then that way they keep more cash for whatever they need it for. Apple uses it for research and development. Apple uses it to open more stores. Walmart uses it to open more stores. That's why they have 10,500 stores. Okay. Berkshire Hathaway uses it for investments. So I can go on, but every one of the largest publicly and privately owned companies, they all do the same thing. They're using leverage, using OPM, other people's money, and that way it helps them navigate uncertainties. And exactly, if you listen to Warren Buffett talk about this, this is exactly what he says. Because a business that's valuable is well capitalized, okay? And what it means by that is it means it has the money to get it through the slow times and thrive in the good times as well. You've got to have a well-capitalized business. It's not from me. Again, this is from the leaders of the most valuable companies. They're the ones saying exactly the same thing. That's the key to having a valuable company, is that when times are bad, you're not worried about it. You know you've got the money to pull yourself through. And when money is good, then you can really thrive. We also don't want to forget about the opportunities that are going to present themselves. In every down economy, we see them, right? We see opportunities to get houses at record low prices. We see opportunities to buy other businesses that are part of our supply chain or competitors at record low prices and fire sale values, okay? There's just so many opportunities that present themselves if you're financially in a position to take advantage of them. So look, bottom line, you want to get money now before it gets harder. You want to get as much financing as you can. Stock up There's a reason we got a loan and a credit line this year when we didn't even need it. We are stocking up, you're stockpiling cash because it's what you should be doing with financial uncertainty. You want to take advantage of all types of financing. Yeah, I talked about business credit. Yeah, talked about credit line hybrid. But let's talk about getting financing for inventory, financing for e-commerce that you're selling online. Let's talk about getting credit lines at Bluevine and Fundbox, because Fundbox might not even be around lending the way they are in the years to come based on what's going on with their financials right now. We want to get in and grab that money while we absolutely can. We want to get in and grab SBA loans and term loans, anything we can qualify for, we want to grab, unless it's like cash flow, merchant cash advance financing, that's really high rates in short term. That's only going to help us if we're investing that money in something that's going to get us a big rate of return. But outside of that really, really serious hard money stuff, we want to get all the money that we can while we can actually get it. We want to save it. We want to invest it. We want to just wait. Okay. But we want to have the money available because, again, the rainy day is coming. And I don't mean that just because it's raining out here right now, but literally the rainy day is coming. So it's a matter of saving for a rainy day. It's here. And we need to make sure that we are financially prepared, not just so we can survive, but so we can thrive and we can take advantage of these opportunities as well. And again, it helps us have reserves for next year before we see more tightening up, before we see more rate hikes, all of which is happening. It's going to happen. I've said this for a year. Now all the stats are supporting that and improving that, and all the experts in the space are predicting the same thing. It's just what happens. And that's the ebbs and flows of the economies, right? We've got peaks, we've got troughs, and everybody makes adjustments in every stage of that cycle. I've been doing this for decades, and lenders always make adjustments right here. When we start to go down, when we start to see financial uncertainty, when we start to get closer and closer to all lenders are going to tighten up. It's just the way that it is. It's never happened ever in this country where they don't. They always do. We know it's inevitable. And this is why it makes a lot of sense for us to be prepared. So if you want to talk more about the money you can get right now, well, you have 100% free finance assessment with us. We'll actually look at your scenario, tell you what to improve with fundability, and then we'll tell you all the money you can get right now. It's 100% free finance assessment. You can go to creditsuite.com/consult to be able to grab it. You can also go to creditsuite.com/CLH to be able to just put some information in for credit line hybrid and have those credit lines ready for you probably by the end of the year. Okay, so there's a lot of money you may be able to get even if you don't think you can get approved. The only way to really know what you can get approved for is go to creditsuite.com/consult. We'll spend some time and we'll tell you all the financing you can qualify for right now. If you got value for this training, also make sure you stop by creditsuite.com/toolbox. I got about $400 worth of goodies right there you're able to get free. All you have to do is share our next live stream to get just at creditsuite.com/toolbox as well. And I also want to give some more shout outs here. Effective Asset Solutions in Chicago. I got St. Louis in the house. Brian from New York, Real Pro Network LLC. Thanks, Ty, Employee Retention Tax Credit, Business Expansion, and Exit Strategist, Credit Builder, and Repair. I love that. Doing a lot of cool stuff. And Dr. Glock, too. Hello. When you get a chance, can you please talk about your partner program? Yeah, absolutely. Our partner program is a program where you can offer business credit and financing as a service and get paid a lot of money. How much you make depends on how much you sell it for, but our average partner makes about $2,000 on every single sale they make. And again, they have an increase of business this time of year because, as you can imagine, when things get harder, more people come in to get money. I mean, a lot of our partners doubled their business in 2021 and 2020 because when COVID hit, everybody became desperate for money because they weren't prepared, which is what I'm trying to help you do is get prepared. And as a result of that, their sales skyrocketed. So with our partner program, there's a lot of details to go through. I've got training on youtube.com/credit suite. You can give us a call. We can talk to you more about that as well. But ultimately, you enroll, you get everything you need to get business credit financing and business credit for your business, improve your fundability, work with our team. Then you also work with our partner success team that's all about giving you all the marketing materials, the website, the training, everything you need to successfully offer business credit financing as a primary or secondary service through our turnkey system. Like our business finance suite's turnkey. A client gets it, they get the system, they get the coaching, and it walks them through everything they need to know to offer business credit financing. So it's like you make the sale, we help you make the sale, we give you the scripts, we give you the presentations, we give you everything you need. We'll even jump on the phone and close the sale with you. And then we do all the servicing, and it can even be done white label in just your business name. So hopefully, Dr. Glock, that answers your question. And Andrew says, hey, if I have damaged personal credit, can I still build business credit? Absolutely. Business credit has zippo to do with personal credit if you do it right. Meaning that the way we help our clients build business credit, consumer credit's never looked at, it's never pulled, it's never viewed. Doesn't matter how good or bad it is, there are no inquiries. You're building business credit strictly from the ground up with no look at your personal credit. So you absolutely can build business credit. And I recommend you work on both, fixing your consumer credit while building your business credit. It's just going to help you navigate financial uncertainty. Great questions today. Thank you very much for coming in. Again, I wanted to give you some stats today about what's happening, give you real-time information, and help you be prepared. So hopefully you walk out of this knowing the exact steps to take. Hey, let's build our business credit. Let's think about fundability. What makes us fundable? Let's make sure our fundability foundation is built out. Plenty of training on each of these topics. Okay. We also want to make sure we get any revolving credit we can. Credit line hybrid's the best revolving credit line program I've seen. There's other credit lines out there. And we also want to get loans. We want to get as much financing as we can get before interest rates go up. And by the way, we can't hide from this. Okay. Venture capital is becoming 2, if not 3 to 4 times harder to get. And I just had a buddy that raised 10 million bucks. His name's Marvin. He's actually my neighbor. We both love exotic cars. I can go on and on about my friendship with Marvin, but he just raised 10 million bucks in his business. He said, man, wow, that was hard. He goes, a year ago, this would have been done in 2 months. He goes, it took us over a year. It's an uphill battle to get venture capital. That's not just Marvin's opinion. This is just it. If you look at the trending of venture capital, I've talked to 3 venture capitalists this week. All said the same thing. It's getting very tight on the equity market too, or even if you're willing to sell equity to get money. It's still getting harder and harder. So the bottom line is the idea here is for you to know what's going on in the market, know the conditions, and know the exact steps that you can take to succeed and stock up on money while you can get it still at really good terms. So now you know if there's anything we can help you with along the way, feel free to schedule a consult or give us a call at 877-600-2487. Thanks for tuning in. Thank you, Patrick, as well. And have a great day. Don't forget to give us a call for your free finance assessment so we can put all the money in your hands, or at least tell you all the money you can get now. So whether you like have us help you or do it on your own, you'll at least know all the financing you're able to get right now to prepare for financial uncertainty. Thanks for tuning in. Have a great day. Look forward to seeing you on our next training. We're talking about more cool ways to get the money you need to start and grow.